Hey everyone, in this video I'm going to share with you my top 24 stocks to buy now in March 2024. I'm also going to share with you how my top stocks to buy have performed so far this year. So in addition to giving you my top stock picks, I'm going to inform you and update you on how these stocks have been performing throughout 2024, as well as explaining a few of the reasons why I like these stocks. So without further ado, let's jump right in. Let's take a look at these excellent stocks to buy.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, in this first batch, I've got the Walt Disney Company, which is trading at a price to earnings forward ratio of 21. The company has done an excellent job bouncing back from the devastations of the pandemic. Profit and cash flow are soaring. Alphabet, Google, trading at a forward price to earnings of 18.2. The company's got a lucrative business model, total addressable market approaching $1 trillion in advertising, and it's got its AI product coming out to rival that of ChatGPT. Nvidia, what more can I say about Nvidia? It's still not expensive in my opinion, trading at a forward PE of just 27.5. I think Nvidia has some room to go given the strong demand for its products. Visa at a forward price to earnings of 24.97 is another one of my top 24 stocks to buy. Also, I've rated Visa as my top dividend stock to buy for 2024. I really like Visa, the best operating profit margin of any company that I follow. That's how lucrative Visa's business is. PayPal's been a little disappointing, trading at a forward price to earnings of 10.5. The stock price fell after the company reported disappointing guidance for profit for 2024. Still, I think the stock offers excellent risk versus reward at its current valuation. Fortinet trading at a forward price to earnings of 35.2. The cybersecurity market is one of my favorite markets to invest in for the next decade, given the growth prospects and the increasing need for cybersecurity worldwide. One risk factor is one of the market leaders in cybersecurity, Palo Alto Networks, just reported disappointing forecasts for the next quarter. I'm a little bit concerned about that, so I'll be keeping a close eye with Fortinet here. Fiverr International also reported disappointing earnings that sent the stock price crashing. It's now trading at an even cheaper valuation, a forward PE of just 9.74. The company is still in growth mode, especially in profitability. Netflix is the next stock I recommend here at a forward PE of 27.89. Netflix has proven itself as the leader in streaming content. That's after a surge of competition came in 2020, 2021, and 2022. Netflix fought them off and came out of that stronger than ever. I like the decisions Netflix management made throughout that competitive pressure. It demonstrated to me they have confidence in their product. They didn't panic and start cutting prices. In fact, they raised prices when competition came in. I like that strategy. It's lifted the entire streaming market higher. I really appreciate when leaders in an industry take that kind of approach. Alibaba trading at a forward price to earnings of 8.147. The company has stagnated in terms of revenue growth, profit margin, and cash flow, and it's got elevated geopolitical risk being that it's from China and the Chinese government is putting pressure on large business. Still, I think the valuation is so cheap that it makes a compelling investment given its prospects going forward. Uber, trading at a forward price to earnings of 25.29, has been one of the most impressive companies in the last 18 months. I really like the job that the CEO has done in the last 2 years in turning that company around from a massive cash losing business to now generating strong cash flow from operations. Amazon, trading at a forward PE of 31.6, is benefiting from the investments it made in 2020 and 2021 to its infrastructure, and it's now growing into those investments, leading to expanding profitability and cash flow from operations. Similarly, Target, trading at a forward PE of 14.65. I like the investments Target has made to its fulfillment business. The buy online, pick up in store, buy online and pick up in the Target parking lot, buy online and have Target delivered to you within an hour or two, same day delivery, has really given Target that competitive edge that it needed to fight off Amazon. It's now turned its more than 2,000 brick and mortar locations into a competitive advantage, whereas 5 years ago, investors were looking at it as a huge drain on the business because of all the expense it had to pay with those facilities and the lack of customer visitation. These new services, these investments in those new services are bringing customers back to Target, and that's truly, truly innovative, and I like that approach Target has taken. The next batch of 12 stocks starts with Starbucks, which is trading at a forward price to earnings of 20. Starbucks has focused on international expansion. Locations internationally are more profitable than Starbucks North American locations, and that has an upward lifting effect on its operating profitability with each year that goes by, and it adds more and more locations internationally. eBay is trading at a forward price to earnings of just 9.399. The company is not growing very quickly, if at all. However, the lucrative business model is generating strong profitability and cash flow, given that there's little investment needed for eBay's business. And so a lot of the profit and cash flow eBay generates, it's able to return to shareholders through dividends and share buybacks. I like that platform business model, that asset-light business model. eBay doesn't own any of the inventory on the platform. It just gets a fee for bringing buyers and sellers together and conducting a transaction. Zoom Video Communications, the next one, trading at a forward PE of just 13.45. Of course, Zoom Video Communications is nowhere near as popular as it was in 2020 and 2021 when we were all working and learning from home. Still, the company benefited because millions and millions of users downloaded and used the platform and got familiar with the platform. Its revenue hasn't come down since the pandemic, since economic reopening. What's harder for Zoom Video now is to convert sales. It's working harder to make sales. It's having to offer better prices, better terms, spend more time with the companies to make sales, and so that's hurting its profit margin. Still trading at a forward PE of 13.45 for a company like Zoom Video, I think is an excellent deal. Chewy is my next favorite stock here, trading at a forward PE of 18.45. The online e-commerce pet retailer has done a great job attracting its niche market and doing a great job capitalizing in that area. I think management did an excellent job both going into and coming out of the pandemic. Near term, the company is pressured because it's not attracting as many customers as it did during lockdown stages. Still, longer term, I think the company's in a good position to gain a strong share of that pet parent market. Nike, trading at a forward price to earnings of 25, is my next favorite on this list. Nike told investors it will be restructuring, cutting costs, and sales for 2024 don't look as strong as they thought it would. Still, Nike is one of the strongest brands in the world, and its transition to direct to consumer is having an upward effect on its profit margins. It's removing a lot of the third-party retailers it used to deal with, and thereby removing the middleman. Going direct to consumer is increasing its profit margin and giving the company more data to work with. Meta Platforms trading at a forward PE of 20.92. Meta's done a great job in adapting to the changing social media landscape, fighting off pressure from TikTok, launching its own short video service that's proving to be incredibly popular, and revenue profitability is soaring again. AMD trading at a forward PE of 32.31. Just now on the cusp of benefiting from the rising demand of artificial intelligence. Also, it will benefit from the replacement cycle in personal computers that's getting underway in 2024. Snap, another social media company that I like, disappointed investors. The stock price fell by 30% after its earnings release. I evaluated, those earnings results and deemed that it was indeed a buying opportunity, and I've placed Snap on my list of top 24 stocks to buy. Coca-Cola trading at a forward PE of 20.33, benefiting from the unleashing of pent-up demand for people to get out of their house, go to restaurants, bars, theme parks, movie theaters, etc., etc. Coca-Cola has a much stronger market share in those away from home channels. It has exclusive relationships with companies like McDonald's, where the only beverage you will find is Coca-Cola. You won't find Pepsi at McDonald's. So the more you eat away from home, the more likely it is you will have a Coca-Cola beverage. The Home Depot trading at a forward PE of 22.64. The home improvement industry is a nearly $1 trillion total addressable market opportunity. Home Depot is the leader in that industry, and it's been able to fight off competition because of the nature of the products it sells. Home Depot sells the type of products that people need in an instant when you need it, and it sells other big and bulky items that's difficult to deliver online. So it's got an advantage there that it's been able to hold off online competitors, and I think it's got excellent prospects going forward. Six Flags Entertainment is the next stock, again benefiting from that unleashing of demand to get out of the home and get away from the house, trading at a forward price to earnings of 10.75. And finally, last but not least, Salesforce, trading at a forward PE of 26. Salesforce initiated massive cost cutting in early 2023, cut thousands of jobs, and it's now benefiting from that as revenue is growing. Profits are growing much faster than revenue growth. So those are my top 24 stocks to buy, but let's take a look at how they've performed so far. So here's some of the performance of the first 12 stocks. You can see here, most of the stocks are up so far year to date. I've had one big winner in Nvidia that's up 59%. The biggest loser in this batch is Fiverr, that's down 14.88%. Uber has also performed relatively well at 27%. In all, only 1, 2, 3 out of these 12 stocks are down for the year. So 9 out of 12 in this batch. And then for the second batch, I've got a little bit worse performance here, and you can see 1, 2, 3, 4, 5 out of these 12 are down year to date, along with two big losses here in Snap, that's down 36%, and Chewy, that's down 32%. Still, overall, the stocks have performed well, which I'm going to share with you. I'm going to compare my results with the S&P 500, which is up 6.85% on the year. If you look at my results here in February, this batch here, you can see my average is 6.16% year to date so far with the 24 stocks that I've recommended. That's an excellent return. I would be happy with 6.16% every 2 months. That's great, but the S&P 500 has done even better at 6.85%. You can see in January, my average performance was 3.06%, and the S&P 500 was only at 2.51%. So while my stocks continue to perform well, they did another, 3.1% in February. My stocks performed better than they did in January. However, the S&P 500 did much better than it did in January. In January, it had only done 2.51%, and that increased to 6.85%. So I went from an outperformance of 26% to an underperformance of 10.01%. Still, I'm happy earning 6.16% every 2 months, and it's great that the S&P 500 did even better. Everyone is making money here investing either in the S&P 500 or in my 24 stocks to buy. So thank you for tuning in this one. I'll keep updating you on my results and my top 24 stocks to buy. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.